Hello everyone, I, Ms. Bhavna Danesh Munod, welcome you all in Agricultural Development Trust, Shardabai Pawar, Mahila Arts, Commerce and Science College, Sharda Nagar, Baramati. Okay children, last period we studied about scope of microeconomics. Now come to our next part children in this topic, that is features of microeconomics. Now we'll study one by one. See features of microeconomics children. Now see, the first feature of microeconomics is study of individual unit. Now study of individual unit means what? We already studied in definition that microeconomics studies in a microscopic way, in a small approach. So individual means what? Microeconomics deals with things in an individual way. Say individual consumers, single he will study. So microeconomics deals with individual study in an economy. So it will be individual units, individual consumers, individual firms, individual industries or individual markets. So studying individual unit is the first feature of microeconomics children. Study of individual units. Keep in mind what I am telling, as we studied that it studies small things, minute things. So one by one he will study. So study of individual units he will study of individual household, he will study of individual firms, he will study of individual industries, he will study of individual markets. Now the second one related to feature of microeconomics is price theory. Now see, already it is mentioned over here price theory, formula I have mentioned over here in the column that price theory is equal to price and production. Means price theory is calculated in this microeconomics by considering the product price and the production price. Price means what production price it will be there. Price theory. So microeconomics is also known. Keep in mind, they can ask for fill in the blank that microeconomics is also known as price theory. Why price theory? Because it deals with product pricing and factor pricing. So product and factors. Now which factors will be there? Land, labor, etc. These are factors. So micro will deal with product pricing as well as factor pricing. So price and production. That is why it is called as price theory. So microeconomics is denoted as price theory children. Now the third one, microeconomic uses partial equilibrium analysis. Now, what is the meaning of partial equilibrium analysis? Means what? Partial equilibrium means studying things in minute way, small way. So, this partial equilibrium analysis is studying, say, in an individual unit, in small way. And it also is based on ceteris paribus method, say, partial equilibrium. So, this microeconomics uses partial equilibrium analysis means what? Studying things in an individual way. Then the fourth one is microeconomics feature fourth one is based on certain assumptions. Now based on certain assumptions means what? Over here ceteris paribus method and laissez-faire policy is used. See what I am telling. Ceteris paribus method and laissez-faire policy has been used over here on based on certain assumptions means what? That whatever they study, it will be related to small things, individual things. And one concept only they will study, that is based on certain assumptions, that is ceteris paribus and laissez-faire policy. That is using only single unit and studying ceteris paribus. One thing. So they use this policies. Which policies? Laissez-faire policy and ceteris paribus method. Using only one concept, one thing in mind and studying. Then related to ceteris paribus, it is also mentioned in bracket in your textbook that other things remains constant. This is a ceteris paribus method. Other things remain constant means whenever we are studying about any single unit, anything, say any product we are studying, say a mobile phone example we are studying. So during that study, when we use this method, microeconomics say, based on certain assumptions, that time if we use ceteris paribus method, that means when we are studying about the mobile phone, children, other things should be constant. Means what? Immediately a new phone should not arrive in the market. Immediately the price of the phone should not change. Whenever we are studying, at least during that time, the particular quality substitute product should not be there, the phone should not change, or the price should not up down, or say the demand and supply should not change. So when these things are constant, say doesn't change, then you study about that particular product phone, that is according to ceteris paribus method. So other things should remain constant and laissez-faire policy tells that other things should remain constant. This is ceteris paribus and laissez-faire policy method. For which point, for which feature? That is based on certain assumptions. Then come to the fifth point in features of microeconomics, children, that is slicing method. Slicing means what? Now say for example your birthday party is there, cakes are there. The whole cake you will eat? No, what you do? You cut the cake, make slices of that cake and you distribute among the people. So here also in microeconomics, children, slicing method means what? Dividing that particular product and studying it in minute way. Dividing, slice, making slice of the products, slicing of the economy into small units and then studying each unit. For example, say study of a particular household. So whatever about the house, you will study that in the way of microeconomics. You will means divide that particular household expenses, say income, say, and then you will study in detail. So that is what slicing method means. What? Dividing the particular unit and then studying them. Then come to the next point related to feature of microeconomics, that is uses of marginalism principle. Use of what? Marginalism principle, children. Now see, MU, keep in mind, and the formula for MU is over here. I have mentioned specifically in bracket, addition of extra 1 unit. Keep in mind, you have to by heart. Marginal utility, MU. What is the formula for this? Marginal utility, that means addition of extra 1 unit. So microeconomics takes help of marginalism principle. Use. So marginalism means what? Change brought, any changes in the production process, say you have added extra unit to the production, you have added extra unit to the supply of any product. So that is more important, that counting is more important. So microeconomic uses marginalism principle, means it is change brought in the total additional unit. So additional extra cost is called as marginal unit. Now the next feature of microeconomics, children, is analysis of market structure. Now keep in mind, the market is divided into monopoly, oligopoly, perfect competition and monopolistic competition. This all points we are studying in detail in forms of market, which you have for 12th standard. So in short, microeconomics will study the whole market economy. So either it will be monopoly means what? Single seller. Either it will be oligopoly, means many sellers in the market. Perfect and monopolistic competition, these are related to number of buyers or number of sellers. So all these studies will be there in detail in forms of market chapter. But here features of microeconomics, analysis of market structure has been told, that is monopoly, oligopoly, then perfect competition and monopolistic competition. This all will be considered in features of microeconomics. Then the last feature of microeconomics, children, is limited scope. See, practically if we see, microeconomics will be very less used by the people because it has consumed lots of time. To study each single unit takes lots of time. So therefore in market, microeconomics has a limited scope. Very less people use that. So microeconomic has a limited scope, as well as it deals with many problems like deflation, say, inflation, then poverty and balance of payments, BOP. BOP means what? Balance of payments. So all these factors are studied in macroeconomics more rather than in microeconomics. Microeconomics helps us, but it helps in a limited way. So, in market, microeconomics has a limited scope as it does not deal with these factors. Many major problems are there: unemployment is there, poverty is there, inflation is there, deflation is there, balance of payments is there. There are many factors, but which we have to study in an aggregate way. So microeconomics helps that, but in a limited way. So they have limited scope towards these factors. They have told inflation, deflation, BOP, and poverty. Now, as a commerce student, you must be knowing inflation, deflation. That is, inflation, deflation means what? Rise in price structure or fall in price structure. So related to comparison of price. Anytime the Indian rupee can fall down. So these are all what children features of microeconomics. So I am repeating again, features of microeconomics means what? Related to study of individual unit, price theory, partial equilibrium analysis. It is based on certain assumptions. It uses slicing method. Then use of marginalism principle is there. Then analysis of market structure. And the last point over here is limited scope the microeconomics is having. Now come to the next part of the chapter, that is importance of microeconomics, children. Now the first importance of microeconomics, see, the first one is price determination. Now price determination means what? Microeconomics explains us about price of different products and various factors of productions are determined. As we studied in scope, that what microeconomics is, first one, theory of product pricing, which is depend upon what? Demand and supply analysis. And also we have studied that microeconomics is also called as what, children? Price theory. So the first importance of microeconomics is what? That it is determining price. So it explains about price of different products and various factors of production which determine. Then the second importance, that it has free market economy. Now see, microeconomics helps us in understanding free market economy. So that free market economic is what? Related to production of goods, what to produce, how much to produce, how to produce, and at individual levels. So in this process, there is no interference of government or any other agency. So whoever the producer is there, he has to think and do the production. So it has a free market economy, children. That the producer has to think how much to produce, when to distribute, what price he should consider for the product. For these processes, government doesn't interfere. So they have a free market economy in microeconomics. Then the third one is foreign trade. Now see, the third point related to importance of microeconomics is what? Foreign trade. Now what does foreign trade? It helps us in explaining various aspects of foreign trade, like effects of tariff on a particular commodity, determination of currency, exchange rates of any two countries, gains from international trade to a particular country, etc. So foreign trade means what we have got from foreign country, how much the currency is there, what tax rate we are doing during import and export business on any particular commodity, how the currency rates are exchanged. So this all will be studied according to microeconomics. So whatever countries, like during import and export, what international profit is there, how much each country has gained the profit. So all these things will be considered, children. So it helps in explaining what? Various aspects of foreign trade, like effects of tariff on a particular commodity, determination of currency exchange rates of any two countries, gains from international trade to a particular country, etc. Now the fourth topic, children, related to microeconomics is, so fourth importance is economic model building. Now see, microeconomics, they have told, it has helped in understanding various complex situations. Complex means what? Complicated, tough situations through economic models, and has made a valuable contribution to economics by developing various terms and concepts, terminologies, tools of economic analysis, etc. So economic models are built using various economic variables. So microeconomics also helps in building models, economic model building. So various complex situations there may be, tough situations may be, it can be studied through economic models, and microeconomics has helped, they have told, has made a tremendous contribution in economics by developing various terms and concepts. They have developed terminologies, they have been helpful in measuring the tool of economic analysis, etc. So economic models are built using various economic variables. Now the fifth importance of microeconomics is business decision. Now see, very important, microeconomics helps a businessman to take decisions. So what decisions businessman, cost of production, how much it should be there, what will be the price of goods, what will be the output production, whether we will have profit, what will be the tax, what will be the cost of production. These all things businessman can study with the help of microeconomics and decide. He can take decision whether next year he should have more production or less production, whether he will have profit or loss. It will be taken immediately decision by businessman by studying his product related to microeconomics. Now the sixth importance of microeconomics, that is, it is useful to government. So see, useful to government means what? Microeconomics always helps the government to formulate policies such as taxation policies are there, public expenditure policies there, price policies there. So these policies help the government in attaining goals and using efficient allocation of resources and promoting economic welfare of the society. So microeconomics, see, important to the government also. How it is important to the government? It helps the government in framing the policies, children. Formulating policies means what? Framing the policies. So these policies will be related to taxation, public expenditure policy, price policy. So these policies will help the government in attaining goals and using efficient allocation of resources and promoting economic welfare of the society. So very useful for government. Then the seventh important point of microeconomics is what? It is basis say microeconomics explains how to utilize resources and have the best utilization of resources. Why? Already we studied in scope of microeconomics for what? The best allocation for economic welfare. Means you don't damage the environment. Use minimum resources and do maximum production. Then you can attain economic welfare, children. What I told you? Use minimum resources and do maximum production. Then you can attain what? Economic welfare. So microeconomics, what I have told, is dependent on basis of welfare economics. Very important, as it tells how to use minimum resources, how to use optimum utilization of resources should be there, and maximum production should be there. So it will have what? Economic welfare. Means it will help the society, it will help the environment, children. Now we studied about related to what? Features of microeconomics and importance of microeconomics. Now we come to the next part of the chapter. As we have studied, economics is divided into micro and macro. We finished about microeconomics definition, features and importance. Now come to the next part of the chapter, children, related to macroeconomics. Now see, definitions we will study. Macroeconomics, the first definition by Professor J.L. Hansen. So Professor J.L. Hansen, he has told, macroeconomics is that branch of economics which considers relationship between large aggregates such as volume of employment, total amount of savings, investment, national income, etc. So in short, I will explain you. Means what? Macroeconomics study things in detail, study things in aggregate. Now he doesn't study about individual income. What they have told is study about national income, total amount of investment, savings. So they study in detail, in lump sum way. So macroeconomics has been defined by Professor J.L. Hansen that it considers relationship between large aggregates. So these large aggregates will be volume of employment, total amount of savings, investment, national income. And the next definition is about Professor Carl Shapiro. So what Professor Carl Shapiro tells us about, that macroeconomics deals with the functioning of the economy as a whole. So it deals with the function of the economy as a whole. See, as a whole. Who? Macroeconomics. So in a whole lump sum way, what it deals with economy. Who? Macroeconomics. So keep in mind, two definitions are there. Anyone you have to by heart, either by Professor Carl Shapiro or other by Professor J.L. Hansen. So J.L. Hansen is telling us that it studies the relationship between large aggregates, and it also studies the volume of employment, total investment, total amount of savings, and national income. And Professor Carl Shapiro tells us about macroeconomics deals with functioning of the economy as a whole, children. Now, in the next lecture, we'll study about scope of macroeconomics, children. So thank you.